Hey there, I'm Chris Peach from MoneyPeach.com and 1AZ Credit Union. Did you know home values in Arizona shot up over 30% from August 2020 to August 2021? This means the same home you could once purchase for $500,000 in 2020 is now selling for $650,000, which also falls outside the conforming loan limits set by the Federal National Mortgage Association. And when a loan falls outside the conforming loan limits, the loan is considered non-conforming and therefore will not be purchased by Fannie Mae or Freddie Mac. So with that said, what kind of loan is required when the mortgage loan you need exceeds the current conforming loan limits? Well, this is when you need to apply for a jumbo mortgage, also known as a jumbo loan. Now, in the past, jumbo loans were primarily used for high-priced properties, for luxury homes, or homes found in areas of the country with a very high cost of living. However, with the recent increase of home prices, buyers are starting to realize jumbo loans are becoming more popular because more and more home prices are now above the conventional loan limits. So here are some things you need to be ready for when it comes to applying for a jumbo loan. First, you may need a higher minimum credit score than with a conventional loan or FHA loan. Often lenders will want to see credit scores at 700 or higher when it comes to jumbo loans. You may also need larger cash reserves on hand. This will vary from lender to lender, but it's not uncommon to be required to show 6 months worth of mortgage payments or maybe 12 months worth of expenses in reserve just set aside. One really nice thing you may find is that some lenders aren't requiring a 20% down payment. Think about it. If 20% was required on a $700,000 home, the buyer would need to come up with $140,000 out of pocket as a down payment. Now here at 1AZ Credit Union, we allow financing up to $1 million with only 5% down. So this means instead of a $200,000 down payment on a $1 million home, you can now buy that same home with only $50,000 down. You will also have some of the same options as you would expect with conventional loans in terms of the way the loan is structured within a jumbo loan. For example, you could opt in for a fixed rate jumbo loan, which means just that. The rate of the loan stays at the same rate for the life of the loan or until you refinance. You can also choose an adjustable rate mortgage or ARM, where the rate can adjust throughout the life of the loan with usually a lower interest rate during the intro period and then a rate that can adjust annually, semi-annually, or even monthly in some cases. And as far as interest rates, well, there's good news there as well. You see, in the past, jumbo loan rates have often been higher than those of conventional or government-backed loans. But the gap between jumbo loan rates and rates for other types of loan, well, it's narrowed. And in some instances, borrowers may even find lower rates for jumbo loans than for conventional loans. And just like with conventional loans, you have the option to pay points or what some call discount points, which allows you to buy down the interest rate by paying a higher upfront fee for a lower interest rate over the life of the loan. In fact, when you're shopping around for loans, do yourself a favor, always look at the APR, or the annual percentage rate, because this will show you the actual rate you're paying based on the mortgage interest rate and the added cost, which includes discount points and any other finance charges the borrower is required to pay the lender. Alrighty, my friends, now that you're familiar with a jumbo mortgage, it's time to take the next step and meet with a mortgage professional to discuss the best options for you in today's housing market. And as always, thank you so much for watching. And if you found this video helpful, do me a favor, hit the like button, drop me a comment, and share this video so we can help as many people as possible make better decisions with their money.